As the dust settled on the tumultuous period of global disinflation in 2022 to 23, the world braced for economic consequences that many feared would be severe. The specter of stagflation, a dangerous mix of stagnant economic growth and persistent inflation, loomed large, and the possibility of a global recession seemed all too real. But as the months passed, something remarkable happened. The global economy displayed an unexpected resilience, defying predictions of a downturn and maintaining a steady course of growth. Economic activity, it turns out, was more robust than anticipated. As inflation gradually eased from its peak in mid-2022, growth in employment and incomes held firm. This was not just a matter of good fortune, but reflected underlying strength in demand that was bolstered by government spending and resilient household consumption. The supply side of the economy also expanded, with labor force participation receiving an unexpected boost, allowing businesses to keep production humming even in the face of rising costs. But how did this resilience materialize despite the significant headwinds? Central banks around the world had responded to surging inflation with aggressive interest rate hikes. These moves were necessary to restore price stability, but came with the risk of choking off economic activity. And yet, in many advanced economies, households were able to draw on substantial savings accumulated during the pandemic, helping to cushion the impact of higher borrowing costs. Moreover, the mortgage and housing markets, which had undergone significant changes over the previous decade of low interest rates, played a crucial role in moderating the effects of these policy adjustments. As the global economy navigated these choppy waters, it became clear that the economic landscape was changing in profound ways. The International Monetary Fund, in its April 2024 World Economic Outlook, projected global growth at 3.2% for 2023, a pace expected to continue through 2024 and 2025. While this might sound like steady progress, it's important to recognize that this rate of expansion is modest by historical standards. The world economy is still grappling with the long-term effects of the COVID-19 pandemic, the geopolitical turmoil following Russia's invasion of Ukraine, and an increasing trend of geoeconomic fragmentation. This fragmentation, driven by rising trade barriers and geopolitical tensions, threatens to slow down the flow of goods, capital, and people across borders. It's a development that could have serious implications for global productivity and growth, particularly for middle and lower-income countries. The IMF's report notes that the pace of convergence towards higher living standards in these nations has slowed, signaling that global economic disparities may persist or even widen in the coming years. The risks to the global economic outlook are now broadly balanced, but far from insignificant. On the downside, new price spikes could emerge from ongoing geopolitical tensions. The war in Ukraine, for instance, continues to disrupt global markets, and the conflict between Gaza and Israel adds another layer of uncertainty. These tensions could lead to renewed inflationary pressures, forcing central banks to maintain or even increase interest rates, which in turn could strain financial sectors and reduce asset prices. In China, the situation remains precarious. Without a comprehensive response to the country's troubled property sector, growth could falter, with negative repercussions for its trading partners around the world. China's economy, once a reliable engine of global growth, is now a source of concern. The IMF warns that without decisive action, China's economic slowdown could weigh heavily on the global economy. Amidst these challenges, high government debt in many economies presents another risk. If governments are forced to implement abrupt tax hikes or spending cuts to manage their debt, economic activity could weaken, eroding confidence and potentially leading to a downward spiral. Such a scenario could also undermine public support for crucial reforms and investments, particularly those needed to address climate change, a long-term risk that cannot be ignored. On the upside, there are factors that could lead to a more positive outcome. If fiscal policy remains looser than currently projected, economic activity could receive a short-term boost, although this would come with the risk of more painful adjustments down the road. Additionally, inflation could decline faster than expected if labor force participation continues to improve. allowing central banks to ease monetary policies sooner than planned. Technological advancements, particularly in artificial intelligence, also offer a glimmer of hope. If these technologies are harnessed effectively, they could spur productivity growth, helping to offset some of the structural challenges facing the global economy. Moreover, stronger than anticipated, structural reforms in key economies could pave the way for a more robust and sustainable recovery. As the global economy approaches what many hope will be a soft landing, the near-term priority for central banks is clear. They must ensure that inflation stabilizes without triggering another economic downturn. This will require a delicate balancing act. Easing monetary policies too soon could lead to inflationary pressures re-emerging, while delaying too long could cause the economy to undershoot its targets. At the same time, as central banks shift towards a less restrictive stance, there is an urgent need for governments to focus on medium-term fiscal consolidation. Rebuilding room for budgetary maneuver and ensuring debt sustainability are critical to maintaining economic stability and growth. This will involve tough decisions, higher taxes, lower government spending, and structural reforms that may not be popular but are necessary to create a foundation for future prosperity. The IMF's report also underscores the importance of multilateral cooperation in addressing the global challenges we face. Geoeconomic fragmentation, climate change, and the transition to green energy are all issues that transcend national borders. Without coordinated action, the costs and risks associated with these challenges will only grow, making it harder for countries to achieve their economic and social goals. In conclusion, the global economy stands at a crossroads. The resilience shown in the face of recent challenges is commendable, but the path ahead is fraught with risks and uncertainties. The decisions made by policymakers in the coming months and years will have far-reaching implications, not just for economic growth, but for the future of the global order itself. As we navigate this complex landscape, the lessons of the past remind us that resilience is not just about weathering the storm, but about laying the groundwork for a more stable and prosperous future.